Alright, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Okay, me again. Okay. As I told you in my first videos, that I would like to share to you on the statements of comprehensive income and statements of financial positions. So this is our statements of comprehensive income and okay. So please memorize the format. It's very important. Okay. Um, Remember, revenue will minus with cost of goods sold, then you will get your gross profit. Then you minus is all your expenses. Okay, this is considered all expenses minus, and you will get operating income. Gross profit, then you will minus your expenses, then you will get your operating income, and then you will plus with other income too, then we get your EBIT, earning before interest and tax. Class, please memorize the format. Alright, then after you get your EBIT, and remember the term too, EBIT, earning before interest and tax, you will minus with interest expenses, then you will get your profit before tax, and then minus with tax, then you will get profit after tax, minus with preferred dividends, then you will get earning attributable to ordinary shareholders. So this is also known as earning available for common stockholders. I repeat, it's also known or considered as earning available for common stockholders. And then you can minus with ordinary dividends, then you will get your return earning. So return earning is the last one, also known as what class? Can I know the other terms for return earning? Correct, it is undistributed profit. Okay, so this is comprehensive income for the year ended 31st December 2012. I take the samples from ABC Berhad in your textbook. Next, balance sheet. Statements of financial positions. Okay, considered as a balance sheet consists of three components, which are three components which are called an asset. Okay, this is your asset, and this is considered as liabilities. Okay, lastly is, what is the last component class? Correct, it is your equity. Okay, I don't teach you how to construct because I believe that you know how to construct. The important, you need to know the item inside the asset. As you can see now, we have non-current asset. Give me an example, class. Plant equipment, office furniture, fixtures and fitting, vehicles, lands, building. All is considered as non-current asset, and these are all is current asset: stocks, inventories, trade debtors, also known as account receivables, other debtors, okay, and prepayment and cash at bank and in hand. All this is current asset. Now back to liabilities. Okay, current liabilities is the company owns someone that you need to settle by less than 6 months. All right, short term. It's more to short term liabilities. Okay, it's trade creditors, also known as account payables, other creditors, and short term borrowing to settle less than 12 months. At the same time, you have long term liabilities, means that the company owns another parties, but it can settle it more than 12 months. All right, is more to long term, also known as non-current liabilities. Okay, we have long-term borrowing and deferred tax. So this we call as what class? Yes, correct. It is total liabilities, also known as. Alright, I'm waiting for your answer. Correct is total debt. It is total debt. Okay, next. This is equity. Okay, remember class, ordinary shares, capital reserve and retained earning considered as equity, and we include it as preferred share too. However, you will learn further in the next chapter, in the following chapter, what is equity, what is ordinary shares, and what is the difference between ordinary shares and preferred shares. Remember, when invested by preferred shares, you do not get any ownership. However, if the investor invests in ordinary share, also known as common stock, the the investor with entitled ownership too. So what is the differentiate between all the shares? I will cover in the following chapters. So but the main point here now is I want you to know the components of financial positions: assets, liabilities, and equities. If you do know what is assets, liability, and equity, is a problem later, because all the formula that we use in later is come from the information. What the informations come from your income statements and balance sheet. All right. So you have to remember the statements of financial positions. So we have the asset, we have liabilities, and we have equity. So this is the important part that you need to know. Remember that the liability is also known as total debt. All right, class. So from these informations, okay, from this information, financial positions and comprehensive income, then you can extract to we need to analyze the whole income statement, right, and balance sheet, because every numbers give a significant meaning. I explained to you in my first lecture. So financial analysis is the use of financial statements. So this is a keyword: use of financial statements to analyze the financial positions and its performance. Okay, a few questions arise as a financial manager. You can when you calculate, when you analyze financial performance. So you can answer all these questions. Does a firm have the resources to succeed in growth? Next question: does it have adequate resource to invest in your project? Third, what is the source of profitability? Did the earnings of the firm meet its forecast earning? Lastly, what is the source of the firm's future earning power? So from where you can get all the answer by using the use of financial statement that you can analyze, so you can know the positions of the company. And what is the tools that we use to analyze? So I give you sets of comprehensive formula. So you can use a formula. We call it as financial ratios. Financial ratios employ a relative latitude and absolute concept. Financial ratio help readers to identify the strengths and weaknesses of the firm. When you calculate ratio, and the answers that you get from the ratios bring uh, it communicates something. So from there you can detect is it strength or weakness. Okay, we have we have five type of ratios. These are type of ratio that we need to measure. Okay, what type of measurement? It means that, all right, if you want to analyze the company, what type of analysis that you need? First, you need to know profitability ratios. So most of investors, especially most investors, this income accounting information is very important. This is because the uses of information such as the manager itself is for planning and decision making. The investors, okay, they also see the ratio before they do any decision decided to invest or not in the company. So first ratio that they see is profitability ratios. They want to see the profit performance. What I mean of profit performance, they want to see how this company control their costs. Next, they want to see in terms of liquidity performance. What is liquidity? Investors, bankers, managers, and other users. So do you want to see is it this company able or not, the ability of the company to repay the current liabilities, the ability of the company to meet the short-term obligations. So that is liquidity ratios. Next is leverage ratios. We also want to measure the level of risk of the company. The higher the level of debt of the company, the higher the risk that the company faces. Third, lastly, the efficiency ratios. Most of the company probably they can have more asset, they bought more machines, but sometimes they generate income in the low levels. So we want to measure how is the efficiency performance of this company. Is it this company efficient, fully utilize the asset to generate more income? Lastly, is the market ratios. Market ratios, this ratio is more to the market share price performance. Okay, this interest is more to investors as user, because investor interest is on the share price. Okay, they want a high value of the share price. They want to increase the share price in future, so they will see the market ratio, either the share price is good or not. Okay, I will explain more details one by one. Profitability, liquidity, leverage, efficiency, and market ratio in my next lecture. So from there, the formula that you get, you can know. Okay, what is the formula that we use to calculate profitability and liquidity, leverage, efficiency, and market ratio? So from here, you can know in details and how the answer that you get can bring a significant meanings to the users of the accounting information. Alright, meet me in the next session. I will teach you on liquidity performance, second efficiency, third profitable leverage, fourth is profitability, and lastly market ratio. I will explain in details on it in my next lecture. Thank you.